Hey, welcome back to YT Finance, and today we're going to be analyzing an article that says these 7 growth stocks could literally 10x in the next 5 years, or by 2027, which is 5 years from now. However, I'm going to analyze this article and to tell you that don't pay attention to articles like these. Even though I know this author highlights some very good stocks, these stocks are in no way going to 10x over the next 5 years. It's literally basically not possible. So for more videos like this one, where I analyze some articles so you all know the truth, remember to go and smash that like button right now, comment your thoughts down below, and subscribe if you want to know the companies that I am buying right now during this negative macroeconomic environment. But without further ado, let's jump right into today's stories. The article starts off by saying that in hindsight, growth stocks haven't been the best investment over the past 8 months because we see a lot of investors liquidating their growth and technology companies and investing more into blue chip dividend yielding companies, or at least companies that are close to a fair value price, or in general just value stocks. Now for this article, he says that he has picked 7 growth stocks to buy that have a better than average shot at appreciating by 10-fold over the next 5 years. And I just think that all of the companies he highlights, there's no way that any of them could do that in that short amount of time. Now if he said and reiterated his thesis that these companies could 10x in the future, then maybe I would believe him with a small portion of these companies, but there's no way any of these companies could 10x in that short amount of time of only 5 years. The author goes on to say that the only qualifying part about this is that the stock has to have an average rating of a buy rating from Wall Street analysts. Well, there are plenty of companies that have buy ratings from Wall Street analysts. However, that does not guarantee that they are going to 10x, because like I always like to say, you need to be able to understand that these price targets from analysts are only meant to be a guidance. They are not what the company will actually be worth in the future or the next 12 months, because normally analysts give 12-month stock price targets. The first company that he starts off with is Nvidia, ticker symbol NVDA, which is a company that I personally like. I own this company. It's a great growth company. However, I highly doubt it's going to 10x in the next 5 years. It's just not in the cards for this gigantic company. Right now, the current stock price trades for $132 per share, while analysts believe the company could be trading at anywhere between $110 on the low end and $320 on the high end. In the year of 2021, the share price of Nvidia grew by 125.5%, but since then it's actually decreased and fumbled back down by 54% throughout the year of 2022 so far. But despite this, the author highlights that analysts have remained very bullish, where 44 analysts are currently covering this company and 35 of them say and give it a buy rating, with only one analyst saying to sell the stock. The remainder of the analysts say to hold the company. The average price target for this company is very good, hovering at around $211 per share, which is more than a 50% increase from the stock's current price. So again, this is a good stock to buy. I own this company. However, I think it's extremely misleading for this particular author to say to investors that this could potentially 10x. I just don't see that happening in terms of their overall market cap. This company is a chip maker, and they have a very impressive 3-year annualized average revenue growth of 32%. However, the bad news is that Nvidia expects that their Q3 revenues will fall by around 17% if we compare it to the same quarter in the prior year. I also want to say, though, that the CEO of the company remains very bullish, positive, and confident that the overall gaming market will rebound, which will reflect very positively in the NVDA stock price. So overall, I do think this is a great company. Like I said earlier, I own it, but there is no way this is going to 10x in the next 5 years. So really be careful about who you listen to and what articles you read. The next company that the article highlights is Dick's Sporting Goods, ticker symbol DKS, which has gained a total of 116.4% in the year of 2021, and it's recently pulled back only around 6% in 2022. Now, is there a good chance that this could actually 10x in the future? Yeah, I guess technically it's a better chance because their overall market cap is smaller, but again, I just don't think it's in the cards or even in the fundamentals of this company to 10x in such a short amount of time. Right now, the DKS share price is trading for $111 per share, but professionals believe the company is worth anywhere between $100 and $160 over the next 12 months. Right now, we have 26 analysts covering the DKS stock, where 13 of them say to buy this company, while only one rates it as a sell. And of course, the remaining analysts are saying to hold the stock, which gives this company an average stock price target of $124.78, which is currently only 16% higher than the current share price. The company also had net sales of $3.1 billion last quarter, which is 38% higher than it was in the same period in the year of 2019. So again, it's not like this is a terrible company, but I think it's very misleading for various authors to say that this company has the potential to 10x, and I just don't see that potential here. The executive chairman actually points out, and I quote, that the state of our industry is strong and we remain in a great lane. Dix is the clear market leader, and as a result of our transformation, we are well positioned to extend our lead and deliver long-term sales and earnings growth. End quote. And what I don't get is that the author of this article even says right here that the DKS stock price won't appreciate tenfold, or maybe won't appreciate tenfold over the next 5 years. And that is just obvious. Of course it's not going to increase over the next 5 years by tenfold. That's absolutely ridiculous. It's just complete clickbait. And that's why I want you all to avoid certain articles or various people pumping up stocks without showing you any fundamentals of the underlying company. Now, with that being said, I do agree with the author that this company does have a pretty good risk to reward ratio, so the outlook for this company is decently solid. However, not as solid as the company we are going to talk about now, which is Perficient, ticker symbol PRFT, which currently trades for $63 per share, while experts believe the company should be worth $92 or $140 over the next year, which clearly implies that the current stock price could be looked at as undervalued. In 2021, the share price of the PRFT stock surged by 171%, but it's pulled back by around 43% in 2022. If you didn't know, this is a consulting firm that helps its customers utilize digital technology to reach their customers and engage with them. It provides its services to healthcare companies, financial services companies, manufacturing companies, automotive firms, and many other companies in various industries. Over the past 3 years, its annualized revenue growth came in at around 15.2%, which is actually pretty impressive. Now, ideally, I like to identify companies that are growing for the next 5 years at a compounding annual growth rate, or a CAGR, of 30% or higher. But with that being said, we'll talk about how this company is actually very intriguing, even though they're growing at a rate of 15.2%, which again is still pretty impressive. Out of 9 analysts that currently cover the stock, 7 say it's a buying opportunity and 2 say to hold it, while none of these analysts say to sell the company. The average price target for this company comes in at $115, which means that investors could literally gain at a minimum over a 52% upside opportunity for this company. This particular firm in Q2 had very good financial results where the revenues rose by around 21% year over year, while its earnings per share jumped by 26%. Also, for the full year of 2022, current forecasts anticipate and expect that the revenues will almost reach $1 billion, bringing in $915 million at the midpoint of its overall guidance, with very strong EPS, where their adjusted earnings per share will come in at around $4.30. So again, this is very, very good. Based on the company's 2022 guidance, we can say that this is a good buying opportunity right now, considering that it only trades at 17.6 times its EPS and 2.9 times their overall sales. So this is very reasonable for a growth company that is growing at around a 15% CAGR. Now, the next company I'm going to talk about is Moderna, ticker symbol mRNA, and you all should be familiar with this because they have been making multiple vaccines and booster shots for various diseases that are running around right now. However, there is no way that Moderna is going to 10x. If anything, we're going to continuously experience a pullback in this overall company. Moderna is clearly a pharmaceutical company, and they currently trade for $130, while analysts believe the company is worth $74 at minimum and $506 at maximum. During 2021, the stock price of the mRNA share price surged by 143%, but since then in 2022, 2022, the stock price has literally been almost cut in half, dropping by around 45%. Moderna reported its earnings for the first 6 months of 2022, and its revenues rose by 71% year over year to $10.8 billion, which is good. However, on the bottom line, it earned $6.7 billion from operations, which is 56% higher if we compare it to the same period for the prior year. Moderna is generating a lot of cash to where it finished quarter two with $18.1 billion worth of cash and investments on its balance sheet, so clearly they have a lot of money thanks to their overall booster and vaccines. But I still think that overall this company is good, but you might want to wait and sit out for a little bit, and there is no way, in my opinion, that this company is going to 10x over the next 5 years. Analysts are more lukewarm on this company, where 19 analysts cover the stock with only 7 rating it a buy, and most of them have a hold rating. However, the median price target comes in at $197 per share, which is still higher than the stock's current price of $130. So I'm going to leave that choice up to you. The next company we have, which is literally the company that there is no possible way, I'm going to say it's impossible for Apple to 10x. Right now, the AAPL share price is going to be trading for around $156, but experts and professionals believe the company is worth anywhere between $122 to $220 over the next year. However, there is no way the company is going to 10x in only a 5-year period. That's absolutely ridiculous. I just want to smack whoever wrote this article. Apple has gained around 34.6% during the year of 2021, and it's pulled back by around 12% in 2022. However, if we look at what Barron's said about this company, I think it's very eye-opening, where they say, and I quote, "As the largest U.S. company by far, with a market capitalization of more than $500 billion greater than the number 2 stock of Microsoft, Apple is widely owned and has a tendency to drag around and be dragged around by the major indexes," end quote. Analysts are extremely bullish on this company, and I agree with them. Analysts say this company is a clear buy rating, with 41 professionals covering the AAPL stock, where 32 of these analysts are saying to buy the company, and only 2 analysts say that it's overweight. Now let's move on to O'Reilly Auto Parts, ticker symbol ORLY, which currently trades at $700 per share, while experts believe the company is worth anywhere between $660 to $823 over the next 12 months. What I like about this company is their free cash flow, which I do think is quite impressive. The ORLY stock in 2021 gained around 56%, and analysts generally like the stock, with 24 of them covering the company, with 17 of those 24 saying to buy it, and they give it an average price target of $768 per share, which again is above the stock's current stock price of only $700. Since 2000, the stock price has appreciated by, hear this, 8,400%, representing a compounding annual growth rate of 22.8%, which is absolutely insane. I really wish I would have invested in this company back in the 2000s. But honestly, if we're going all the way back to 2000, I would have much rather invested into Amazon, Apple, and Microsoft, because those have absolutely taken off. Lastly, we're going to talk about Cross Country Healthcare, ticker symbol CCRN, which trades at only $29 per share, which is not bad, because on average they're supposed to be anywhere between $26 and $45 over the next year. This company, ticker symbol CCRN, has gained 213% in the year of 2021, but in 2022 it's actually cooling off like the majority of stocks right now, because the stock market is pulling back very dramatically. However, I think this is very healthy for the stock market to go through pullbacks such as this, so they can eventually re-enter into a bear market. And it says, and I quote, that Cross Country works with healthcare clients, such as hospitals, outpatient clients, ambulatory clinics, physician practice groups, and other healthcare related facilities to recruit and staff their businesses. And we can conclude from this that the demand for these services is extremely strong. Also, I want to point out that over the last 3 years, their revenue has grown by an annual growth growth rate of 27.1%, which is literally right on the cusp of that sweet spot of a 30% CAGR. Man, it's really hard to draw with a mouse. Anyway, but moving on, this company has a secret growth driver, and one of its biggest growth drivers is what's called their Managed Service Programs, or MSPs. And between 2015 and 2021, their estimated revenue for these MSPs grew by 800 to $1.1 billion, which is absolutely insane. All is that to say is that all of these companies on this list could be argued as good companies overall, especially my top picks would be Nvidia, Proficient, and Apple. But I am telling you to be very, very picky about who you listen to, because there is no way any of these 7 growth stocks are going to 10x by 2027. So with that being said, I would love to hear your thoughts down below. Remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, stay safe out there, and I will see you in the next YT video.